Good morning and welcome back after the Easter holidays. Today we are looking at PNC, GS, MS, WFC, Ericsson and TSMC. Let's get started. For each company, we have added a new data category, questions.
PNC Financial Services Group announced results on April 14, 2022. Interesting facts picked up from the call. Expenses to be up 4%, including integration expenses, while the effective tax rate to be around 19%. Non-performing loans of about $2.3 billion, which is less than 1% of total loans. Expect net interest income to be up 10 to 12%. We expect non-interest income to be up 6% to 8%, which results in total revenue increasing 9% to 11%. Residential and commercial mortgage non-interest income was $50 million lower, primarily due to decreased commercial mortgage activity. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. On the loan side, and they mentioned the higher line utilization on the commercial side, are you beginning to see CapEx plans drive loan demand? Do you still buy back the same amount of stock? And what would you consider to be a normal rate of capital utilization at your organization? Finally, we drilled down on specific items to see if there was enough relevant information. Company flagging that interest rates are going to get back to a place where people start paying attention again. On delinquencies, total amount was $1.7 billion, reflecting lower consumer and commercial loan delinquencies. On outlook, while the company is stating the 9% to 11% growth for the full year, it is also flagging an increasing uncertainty in the market. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 66.6% positive. About investments, the sentiment was 66.6% positive. About costs, the sentiment was 75% negative. About growth, the sentiment was 68% positive.
Goldman Sachs announced results on April 14, 2022. Interesting facts picked up from the call. Financial advisory revenues were $1.1 billion. Total quarterly operating expenses were $7.7 billion, down 18% year over year. The forward curve implies 9 rate hikes this year, and a few more next year. Underwriting net revenues were $261 million, down significantly versus a record performance in the first quarter of 2021 on the lower industry issuance volumes. Machines also focused on the more qualitative remarks by management, flagging the following. Provisions in the quarter were primarily due to the growth in the company lending portfolio as well as broader macroeconomic factors, including a slowing growth outlook. The company is seeing new stress on supply chains and commodity prices, and U.S. households are facing rising gas prices as well as higher prices for food and housing. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Is the capital raising environment disrupted? And then similarly, as far as deposits and deposit costs, what are the expectations for deposit beta in Marcus for this rate hiking cycle? How are you thinking about the growth of the wealth business at this point? How much of an impact do you think the quantitative easing by the global central banks? Finally, we drilled down on specific items to see if there was enough relevant information. On supply chains bottlenecks, the company is seeing an acceleration towards deglobalization. On revenues, the underwriting revenues were down significantly at $261 million versus the first quarter of 2021. On growth, the company has managed to grow its bank business to be almost a top 10 in the market. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About investments, the sentiment was 60% positive. About growth, the sentiment was 88% positive. About sales, the sentiment was 50% positive. About outlook, the sentiment was 100% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in Goldman Sachs identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 123.64% return over the last 5 years while being 44% of the time in cash.
Morgan Stanley announced results on April 14, 2022. Interesting facts picked up from the call. Long-term net outflows reflected approximately $9 billion of institutional outflows in the company's solutions business, including the expected redemption of a large asset manager who brought their equity trading implementation in-house. The company money market guidance was about plus 200 and they stand by it. Company expects loan growth over the remainder of the year to be consistent with their prior guidance of approximately $5 billion per quarter. Machines also focused on the more qualitative remarks by management, flagging the following. Europe delivered its best quarter in over a decade, while Asia saw its second highest result with strength in both equities and fixed income. Commodities delivered a more diversified result with revenues notably higher than the previous first quarter. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. What do you do with this higher earnings production with all the capital that's being produced? How much do you have to prepare the platform, or is it they're waiting for this deluge of products that's coming? Have you seen any improvement in breakaway broker trends or just the recruiting backlog more broadly as volatility has started to moderate versus the level seen in Jan and February? Have you seen any improvement in breakaway broker trends or just the recruiting backlog more broadly as volatility has started to moderate versus the level seen in Jan and February? Finally, we drilled down on specific items to see if there was enough relevant information. On growth, loan growth remains strong in the quarter, with bank lending balances growing $7 billion driven by securities-based lending and mortgages. On outlook, the company mentioned it remains difficult to predict, but the second quarter has started constructively and clients remain engaged. E-Trade, a significant part of integration is expected to be done by the end of the year. By the end of 2022, the company expects no to separate integration expenses anymore. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 50% positive. About costs, the sentiment was 50% positive. About growth, the sentiment was 72% positive. About outlook, the sentiment was 60% negative.
A short look at how algorithms on Mark's Sign Algo simulate investing in Morgan Stanley identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 158.23% return over the last 5 years while being 50% of the time in cash.
Wells Fargo announced results on April 14, 2022. Interesting facts picked up from the call. Consumer and small business banking revenue increased 11% from a year ago, primarily due to higher deposit balances, higher deposit-related fees, primarily reflecting lower fee waivers, and an increase in debit card transactions. Average loan balances were up 18% from a year ago, with increased demand across most industries driven primarily by capital expenditures and growing working capital needs. Non-performing assets decreased $323 million, or 4% from the fourth quarter. We continued to see median deposit balances above pre-pandemic levels of approximately 25% compared to 2020, but down from the highest observed in 2021. Machines also focused on the more qualitative remarks by management, flagging the following. The mortgage origination market experienced one of its largest quarterly declines that the company can remember, and it will take time for the industry to reduce excess capacity. Company believes the mortgage market experienced its largest quarterly decline since 2003, primarily due to lower refinance activity in response to higher mortgage rates. Asset-based lending and leasing revenue increased 17% from a year ago, driven by higher loan balances, stronger net gains from equity securities, and higher revenue from renewable energy investments. Higher interest rates, along with our expectations for continued loan growth, should drive higher net interest income growth than we anticipated at the beginning of the year. Loan demand has been driven by larger clients who are increasing borrowing due to the impact of inflation on material and transportation costs, as well as to support inventory growth. March was the 8th straight month in which inflation outpaced income, with lower income consumers being most impacted by rising energy and food prices. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. What should we be thinking about in terms of investment banking, trading, and maybe the Northwest Venture Line? Do you think it's conceivable that we hit 15% ROTC at some point over the next 4 to 6 quarters even without the asset cap being lifted? Given how lasting some of these inflationary pressures seem to be, do you see any risk to that outlook of another downturn in cost next year? Finally, we drilled down on specific items to see if there was enough relevant information. On growth, the company had broad-based loan growth with both consumer and commercial portfolios growing from the fourth quarter. On spending, all spending categories were up with the highest growth in travel, entertainment, fuel and dining after strong growth in the first quarter of 2021, driven by stimulus payments. On outlook, if the company continues to see increased demand, it's possible that average loan balances will be up in the mid-single digits from the fourth quarter 2021 to fourth quarter 2022, up from the prior outlook earlier this year of low to mid-single digits. On the regulatory issues, the OCC has terminated a consent order regarding add-on products that the company sold to retail banking customers before 2015. On investments, the company has continued to invest in Zillow and made changes to expand customer usage, including increasing spending limits. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 100% negative. About prices, the sentiment was 50% positive. About growth, the sentiment was 74% positive. About outlook, the sentiment was 55.5% negative.
A short look at how algorithms on Mark's Sign Algo simulate investing in Wells Fargo identifies algorithm buy Sign 002 as the best algorithm for buy and hold, with a 31.5% return over the last 5 years while being 84% of the time in cash.
Ericsson announced results on April 14, 2022. Interesting facts picked up from the call. On the IPR side, the company's strong 5G position and leading patent portfolio makes us well positioned to conclude the outstanding renewals. The company saw very strong continued momentum in North America, where sales were up 9% year over year, driven by continued very high demand for 5G solutions across all segments. Ericsson aims to create a new market for network APIs that will enable developers to use the advanced network capabilities enabled by 5G, basically putting the 5G network at the fingertips of the developers. We have recorded a provision related to Russia for the impairment of assets and other extraordinary costs of 900 million in the first quarter. Machines also focused on the more qualitative remarks by management, flagging the following. In digital services, we saw encouraging sales development in the cloud-native 5G core portfolio with double-digit growth. Company has 16 out of the 20 largest operators. At the same time, Ericsson sees the Chinese operators that for 2022 are talking about lower investment in 5G because of lack of applications. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. And then secondly, thinking generally about cost inflation. What is your ability here to pass a higher cost to customers? What can you say about this cost level generally for the remainder of 2022? Can you tell us if you're now happy with your inventory levels, or will this investment into resilience continue in the remainder of the year? And the second thing is on the enterprise. How much do you estimate your enterprise channel is a percentage of revenues today? Finally, we drilled down on specific items to see if there was enough relevant information. On sales, in digital services, the company saw encouraging sales development in the cloud-native 5G core portfolio with double-digit growth. Sales growth in Southeast Asia and India decreased by 17% year over year. In Europe and Latin America, sales increased by 15%, with Europe seeing an 18% increase. In Middle East and Africa, sales decreased by 9%. On investments, the situation regarding the global supply chains is challenging, but to ensure that we can deliver, we've made proactive investments in buffer inventory, among other things. On growth, saw organic sales growth of 3%. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 56% negative. About investments, the sentiment was 71% positive. About costs, the sentiment was 57% negative. About outlook, the sentiment was 56% positive.
TSMC announced results on April 14, 2022. Interesting facts picked up from the call. The higher demand at mature nodes will be driven by structural factors such as an increase in long-term demand for certain specialty technologies due to the multi-year industry megatrends of 5G and HPC and increasing silicon content in many end devices, as well as the acceleration of digitalization. TSMC strategy and mature nodes is to work closely with our customers to develop specialty technology solutions to meet their requirements and create differentiated and long-lasting value to customers. The company forecasts the growth rate of the overall semiconductor memory industry to accelerate to high single-digit percentage level in the next 5 years as compared to around 4% CAGR in the past 10 years. HPC increased 26% to account for 41%. IoT increased 5% to account for 8%. Automotive increased 26% to account for 5%. And DCE increased 8% to account for 3%. TSMC built in Taiwan for more 28 nanometer capacity. The company first quarter gross margin increased by 290 basis points sequentially to 55.6%. Machines also focused on the more qualitative remarks by management, flagging the following. TSMC expects the HPC platform to be the strongest growing platform this year and the following years, and it will be the largest contributor to its growth. The company believes it can achieve long-term gross margin of 53% and higher and earn greater than 25% ROE through the cycle. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. How does the TSMC evaluate the impact on inflation and geopolitical tension? Could TSMC give us some view on the industry growth for specialty and mature technologies? So do you think that the high inventory is actually a signal of weak demand or anything we miss here? And what is the outlook by platform? And what's the time frame for N2? Finally, we drilled down on specific items to see if there was enough relevant information. On production, the company capacity remains very tight throughout the whole year of 2022. On sales, TSMC expects business to be supported by HPC and automotive-related demand, partially offset by smartphone seasonality. On production, the company expects the supply chain to continue to maintain a higher level of inventory as compared to the historical seasonal level for a longer period of time prolonged by recent corporate-related supply chain disruptions, and uncertainty is brought about by the political tension on the demand side. Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About growth, the sentiment was 63% positive. About outlook, the sentiment was 83% negative.
A short look at how algorithms on Mark's Sign Algo simulate investing in TSMC identifies algorithm buy Sign 001 as the best algorithm for buy and hold, with a 66.91% return over the last 5 years while being 72% of the time in cash. I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.